Hello, everyone, and happy Thanksgiving Eve to you all. I'm Rachel Deschelle, Senior Manager of Trading Services and your host for Trading Price Patterns, where we do exactly that. We trade price patterns in today's class. We talk through the setups and formulate our trades from there. Now, we have Mike Fairborn in the chat today. Please feel free to chat in your questions, comments, requests during today's session. I will be sure to keep an eye on those. Please follow us on X as well. Mike is Mike Fairborn CS. I am Rachel CS. We post lots of charts, all things markets, and maybe we'll post a little bit of our Thanksgiving food tomorrow just to kind of share with you there as well. Now, also, please like this video today and please subscribe to us on Trader Talks channel for Schwab Coaching here on YouTube. Now, before we get started today, we are definitely going to cover a couple bullish pattern setups today. So that's going to be our focus. And then we'll end the class with going through that watch list of all of our patterns, just like we always do. But before we get started, let's hop into the disclosures here. So options carry a high level of risk, are not suitable for all investors. The information that we're going to cover is for informational and educational purposes only and should not be considered any type of recommendation or advice. And Schwab does not recommend the use of technical analysis as the sole means of research. And we are using the paper money today, which is a little bit different from live. So let's move into our agenda. We're going to start with an announcement because we have some very exciting upcoming events. So we're going to start with our market overview, review our old trades, place new example trades, and go through our management of those. Now, our announcement, our upcoming workshops and market drive events. We have coming up next month, in about a month, we have Miami, the advanced options. I will be there, so if you are going to be there, please feel free to holler in the chat, say hello when we are there. And then we also have Dallas as well. We have Dallas the beginning of January for a 2-day trading workshop there as well. Same with Bellevue, Washington at the end of January. So now that we've covered that, let us just kind of dive into Thinkorswim and do our overview of the markets. Okay, we're going to start with the Dow Jones Industrial Average because the last few days have definitely given us a bit of a bounce here. We saw that all of the major indexes, the Dow Jones, NASDAQ Composite, and the S&P 500 are going to, or they did bounce from their 100-day moving average, and the Dow is really leading the charge with being able to reclaim that 50-day as well. So that's definitely something we've kind of seen 4 trading days up with the Dow there. Now, the NASDAQ composite here, a lot of people were thinking that this could be a possible head and shoulders pattern that was taking place just because of this neckline here. We see this kind of possible left shoulder rounded out, the possible head, and people kind of thought we were getting into this right shoulder here, but we gapped above that level today or moved higher above that level, charging above the 50-day. So it may invalidate a possible head and shoulders pattern unless we see like a little bit of a drop from here, but it looks like we are breaking through a couple levels of resistance here. Even if I draw that trend line connecting a couple of those highs that we've rallied back up into, we notice that we broke through that today decisively. So that's kind of something to keep an eye on there. Now the S&P 500 as well, similar thing. This really would invalidate where we would possibly have seen that possible head and shoulders because those shoulders wouldn't be the same height. Even though we have the neckline, we have the first 2/3 of the formation, but we are seeing that move higher. We definitely see a little bit of a gap there. And if we take our trend line again and connect these highs, it looks like we are still working through seeing if we can jump through that level of trend line resistance there. So something to watch there. Now last thing I want to cover, because this caught my attention, is the Dow Jones Transportation Average. So we've seen that that's obviously been a laggard from the other three indexes. since, and it's been kind of battling through this range bound pattern today, or I guess the last few months, I should say, and then breaking out today. So we are seeing that breakout in the transports. So that is kind of something to keep an eye on too. And one of the stocks that we're going to look at today is in the transportation index. So definitely lots of things to look at here. Now, last week we placed 2 example trades, one on Freeport McMoRan with a possible triangle pattern that took place. And we definitely saw that this pattern continued really till close to the apex and almost kind of formed not so much, like kind of less of a pattern. I'm going to remove these drawings here, clear drawing set, and I'll just kind of show you here. We almost had this little bit of a short-term range, and it kind of looks like we are moving above that today. So this actually may be a type of entry order that I'd close out, since it kind of shaped into another type of pattern, waited too long for that pattern or that price to really reach the apex of the triangle, which a lot of times kind of invalidates those triangles there. Typically they break out roughly 75% of that pattern completion. So we're going to cancel that trade for that break above that possible triangle pattern, which was invalidated. Now, if you still want to trade this, traders may trade this little range here. You can probably see it better on the short term here. It looks a lot like a triple bottom, actually. So that could give traders yet another setup, but we're going to leave that one for now in this class. We did place another trade for Newmont. We placed a bullish trade with a break above this resistance line. We just need to move our entry order a little bit up. I think we had it around like 94 something to see if it would break above this level, but we probably need to just move it right up to like 93.38 or so with that 2% move above. I tried doing that today, but I was having a little tech issues. So we will move that up there. But let's get into some of the trades that we are going to place today. So one of them, let's start with the transport. So one of them being Delta Airlines here. So the best way to find these chart patterns, I will tell you guys, because I get these questions all the time on how do you find these chart patterns, these setups, and the real answer for you guys is that I look at tons of charts, and I think it's easy if you just kind of keep it to the Dow Jones Industrial Average, the NASDAQ 100, the S&P 100, 400, or 500 to still have a narrow list there, but really, that's essentially what I do, is just look at a ton of charts, flip through the watch list, look at them on different time frames with the chart grid. So for you technicians out there, it may help to just maybe create a grid with multiple time frames, since in technical analysis, when looking for patterns, they can show up on all these different time frames, making them such fractal patterns, and you can see where they occur within the context of the trend. So that's typically my process when I kind of go through a watch list. I can just easily flip through some of these stocks. Now, moving into Delta Airlines, we see a range-bound pattern really taking shape over the last few months here. So we saw a little bit of a support range down here around like 55, 50 or so. And then we see the upper bounds right above 63. And we do have quite a bit of a breakthrough today. Obviously, this pattern looks very similar to what we saw in the transport. So what we're kind of looking towards, since there was an uptrend preceding this kind of pause in the trend, sometimes we need that rectangular pattern for the price to correct really through time rather than price in this case, for shares to be accumulated for that next move higher. And that's kind of what we're seeing here. We know that obviously these rectangular patterns or box patterns, whatever you want to call them, they can be distribution patterns as well. where they can break to the downside. But in this case, it's looking a lot more of a typical accumulation pattern with that break to the upside there. So that's what we're going to watch here. And if I just take this measured move from the middle of that zone to the middle of this zone here, we can take that measured move and see where our possible target could be. So our possible target would place us up near right around like 71 or so. So that would actually place us near those yearly highs, or actually a little bit above that. So that could be a target that we are watching there. So what we're going to do today with this one, we're going to take a bullish trade. Since it's a very directional trade with our profit target there, we're going to place a trade for a long call option, which gives us the right to buy the shares at the underlying strike price by a certain expiration date. So we're going to pay a small premium, use that capital efficiency to really take advantage of a possible move to the upside. Now, a couple things to note here. If we look at just when this pattern started forming, it was really end of August. Now we're at the end of November, so that's taken about 3 months to form. We're definitely going to take that into consideration when crafting our option strategy there. So we want at least 3 months of time. And so I'm going to put 4 months actually on the left-hand sidebar in my scratch pad, to say that we want to give ourselves enough time over the next 3 months for it to reach that level while not seeing so much time decay on our option. Because we know when we are buying options, time works really against us, and we're going to see that theta decay each and every day on our option there. So we want to look for other things as far as like directional movement to kind of make up for that and give ourselves enough time. So another thing we've talked about in this class is also waiting for confirmation. Whoopsies, there we go. We'll zoom in. So waiting for confirmation above a certain breakout level to take a specific trade. And we talked about how confirmation, the one that we use in this class, is the 2% move above resistance or below support. We've tried the 1% move. It seemed like it wasn't enough for some of our trades, so we changed that to the 2% move there. Now, some of you may use the Horner rule with those 3 closes above a level. Maybe you're looking at 2 closes above a level, whatever it may be. But when we are trading price patterns, us as traders, we want to make sure we wait for that confirmation, because that tells us that that pattern is complete. And it also tells us that we have a decisive move outside of that pattern, which gives us enough conviction to really take that trade where we may not see a pullback or a failure of that pattern where it re-enters the pattern. So we're going to look at that. Our entry is going to be 2% move above, and let's just kind of see where we're at right now. So if I take the middle of that range, take 63.11, where my cursor is, 63.11, multiply that by 1.02 for 2% move. That puts us at 64.37, and we are trading above that now. So we have over a 2% move, so we can take this trade. So let's kind of talk about where we could possibly place our profit targets or let our profits run. Well, that would be this measured objective up here. Of course, prices or patterns are no guarantees, so there's no guarantee that it's going to reach that price level, but we're going to give ourselves about 3 months for it to possibly reach that level up there around 70 or 71. So if I move to the trade all products tab and go into Delta Airlines, I'm going to take a look at wanting something that's roughly 4 months out. So I see the 20th of March here, and I'm just going to scroll down on this option chain here and show you what we're working with. Okay, so we have, since we're looking to buy a call option, looking to take advantage of the bullish breakout in this case, we're obviously going to look at the call side. We want an option with a little bit of intrinsic value, so it has that higher probability of that option expiring in the money. And also we see more of a move on the option in our direction if the stock price does go up. So looking at even just the deltas here, that's going to tell us how much our option is theoretically going to move based on a $1 move in the stock. So for this example, I'm actually going to go long the 60 strike call. I see that there is a ton of open interest. We have thousands of contracts there. There's been volume in the options today, even though they're kind of farther out. So I'm going to right click on this and go to buy custom, and I'm just going to use a stop. So I'm not putting a profit target on this one because we don't know what the price of the option is going to be when the stock price reaches a level. Now we can use a conditional order for our profit taking order like we have done many times in this class, but today we are just going to place this with a exit order to the downside for if price re-enters the pattern. So that's what that's going to be for. Now the entry, we talked about how we want to enter today. So I'm going to start my price discovery at the midpoint there. And then let's talk about when we can exit to the downside. So if we're looking to exit to the downside, that is obviously if we have a pattern failure and price breaks back into this pattern. So if it moves, let's say if it moves lower than the breakout candle. So lower than the low of the breakout candle, which I'm hovering over that now. And we are seeing that that is at 62.10. 62.10 is where we want to get out if the price of the stock moves back into that pattern, because it tells us that that pattern failed. It's no longer a validated pattern. It is completely invalidated, and we probably don't want to be trading it if that is the case, since we are sticking with trading actual price patterns. So that was 62. That was 62.10. We're going to use the conditional order entry on the right-hand side and just place this for if the mark price is less than or equal to, back this up, 62.10. Okay, so we got that in there. If the price of the stock is less than 62.10, we are going to actually use a limit order to have more control over the price. And we are just going to make our limit linked to, and we'll just link this to the current bid at the time. We'll put no offset here. So whatever the current bid price of the option is at the time that this possible move takes place in the stock, we are going to send that limit order to exit. So we don't know what the price of the option is going to be, but we still want to have control over the price using a limit order. So if I hit save here at the bottom, that will give me a setup for my trade here. Now, that would theoretically give us a pretty tight exit, and I'll kind of show you what this looks like. So if we take the kind of the column headers here and change this to Theo price mark and just kind of simulate what that move would be. So if we had a down move quickly within the next week or so, because that's typically when patterns fail, it usually breaks out, takes a couple days before re-entering the pattern if it's going to fail. So typically those moves happen pretty quickly. So if I just even looked a week out from today, which is the 3rd, and if we saw that drop in the price of the stock from 64.58 to 62.10, we're going to say down to 20 in this case, or I guess down to 40 in this case. And then we're going to click out of there to see where the possible price of our option would theoretically be. So if I look here at that Theo price, it's going to be roughly 72.28. I mean, that's no changes in implied volatility. That's if a week is passing. So there's no guarantees that it's going to be around there, but it could be roughly around that level, just looking at the passage of time and what the price of the stock movement could do. So we know that a trade size for our account, because our account is a little over 124,000, we have roughly like 6,300 to use in our trade size. So we could bump up the contracts a little bit more. We can bump that up, and we could, so if we just take like the difference between even $7 and $9 where we would possibly enter, still with 5 contracts, that's still within the 1% risk of our account. So we are going to work with that right now and use this as our entry. So let's kind of move with that. I'm going to hit confirm and send. Everything looks okay to me. And the most we are going to lose on this trade, and just because the most we are risking in this trade, and I kind of talked about that staying within like the 6,300, but we are only risking 4,500 technically because we had we are buying 5 contracts, and the most we can lose is what we are paying for it. The most we can make is technically infinite because the stock price could go up to infinity. It's probably not going to, but it leaves us with untapped gains there. So that's why we're kind of leaving that open with our profit there. So I'm going to hit send on this order. And we just got a fill. Oh, and I'm going to go back here and make sure I move this to our price patterns group so that I don't get that confused with the other ones. And we're going to go back to the charts here. Okay, so let me check the chat. Let's see. Josh, you had a question. So we expect price to reach around $70 within 3 months. If we pay $9 for a 60 strike, our break even is 69. Are you expecting price to approach or near the intended move way before expiration? That's what kind of we're watching, and that's what why we're gonna leave that profit taking order out. So we are kind of expecting that move. Obviously, we're gonna have to manage that trade with it as well, but yeah, we are expecting that move before expiration. Let's see. Everyone is talking about their turkey day, their dogs. Okay, so let's move to the next one here, and we're gonna go through triple M, so 3M. So the pattern that I saw in 3M was this ascending triangle pattern here. We have this kind of really straight arrow of resistance or straight line of resistance there within kind of around that 172, 173 type zone there. So that's really going to be the level to watch for us for a possible bullish trade, because a lot of times these ascending triangles tend to break to the upside there. So we're going to be looking for that. I see another question. What tool do you use to draw the potential move up? I think you may be talking about the trend line tool. So if I just take the trend line tool and measure a certain range, I just take that tool and I either right click and duplicate that drawing, or I just take it and I move it to that breakout level, if that's the case. So hopefully that answers your question there. Okay, so then we're also seeing these higher lows taking place, and for a triangle pattern to really occur, we need 2 touches on each side. So we need 2 touches of resistance. We need 2 touches of support. Obviously, it's going to give us a little bit more, even more conviction, even more of a kind of importance that is placed on these trend lines or levels if there is more touches in those levels, because price will obviously show the importance of those levels there. So with this one, we have 3 touches so far nearly on the upside there, and we will be looking for a breakout 2% above that level. So what I'm going to do is I'm going to take my cursor there, place it right there at the middle of that resistance, and we're going to look at where our entry would possibly be. So we're going to take 172.72 times 1.02, and we're going to get 176.17, 176.17 as our breakout entry, our conditional entry. So we're going to wait for the stock price to reach that level if it does, and then we're going to take a bullish directional trade there in that case. Now this pattern has only taken about a month to form, so we're going to give ourselves at least a month of time. So we'll probably be looking roughly 2 months out in expiration when we're looking to craft this strategy here, because a lot of times there is an alignment with how long the pattern takes to actually complete. with reaching its possible breakout points. So we're going to take the high of that pattern to the low of that pattern, really looking at the base there. And I'm using that trend line tool there again. And I am going to move that trend line tool and place that on the upper edge there. So that would give us our target price right around 186 or so. So 186 would be our target price. And I see a couple of questions. Since in the last 1/3 of triangle, does it need to break in a few days? Yes, it would need to. I mean, we are getting pretty close. So either we're going to have a decisive move to the downside, we're going to be range bound and it not really turn into quite of a triangle, kind of like we saw in FCX where it then kind of started trading in a range, or we're going to have that decisive move to the upside. So we only want to take this trade if we see that breakout here pretty soon. If it moves to the downside of that triangle and breaks out there, obviously we won't be taking that trade. And that's why we're just going to use that conditional order to make sure all the conditions are right for us to enter into this trade. So that is a roughly, how much is that? That is a $13 move to be possibly made in a matter of a month. So that is quite a move there that we would be looking to capture on. So we're just going to take a long call trade, walk through the same type of example that we did for the last one, but obviously using different construction for our trade with this one here. So if I look at the trade tab, we talked about looking about 2 months out. We have a couple non-standard options. We have weekly options, but the 16th of January gives us roughly 2 months of time. So we have 51 days there still. And then I'm going to change this back to our defaults to look at the Greeks and volume and open interest. So if I'm going to look at the call side here, I want to look for a liquid option. We do have a ton of liquid options within 3M here. Lots of open interest. We do see a lot more volume in kind of the out of the money contracts here, but we're going to stick with an in the money contract, looking for that intrinsic value, looking for that a little bit larger delta to catch that move. So what we may be looking for is actually this 170 strike call. So if I take this 170 strike call, right click on it, buy custom with stop, we're going to do the same type of trade that we just did. We are only going to enter this trade when it has the rules of breaking 2% above that resistance. So when we have that confirmed breakout. So if it does, I remember the price we were looking at is 176.17. So let's just say within, let's do that Theo price again. Let's just say within the next week, it moves to 170, gosh, I already forgot that. 176.17 is our entry. So that's going to be about, I mean, roughly like a $5 move to the upside. So let's just say $5 of a move to the upside. Okay, if we saw a $5 move to the upside, our theoretical price on our options going to be roughly $10.42. So that's with a week of time passing. Now, if it doesn't reach that level, remember, we're not going to get into this trade. These are just setup trades that you could use to wait for confirmation. If you are not seeing that breakout today, that breakout confirmation today, you'll kind of set those up for later. But that is going to be kind of the theoretical price that we can kind of assume all other factors remain the same if over the next week it really gets up about $5 or so. So keep that in mind. But what we're going to do is we're going to replicate that kind of like limit offset order to get in at the current asking price, whatever that option price is at the time, when the price of the stock is at 176. So I'm going to pop this back open to see it. Click on the gear on the right hand side. And we're going to say if triple M, 3M, is greater than or equal to 176.17, we're going to use a limit that's linked to the ask. And we are just going to make that good till canceled. We're going to leave that limit offset at 0. So whatever the price of the asking price of that option is, when the price of the stock makes that decisive move, we are going to buy a call option there, and that still gives us about a $10 move to run. So we're waiting for confirmation to where we may miss out on that first little initial move. So we're going to hit save. And then we also want to make sure that we exit this trade if price breaks out and then re-enters the pattern. So we're going to kind of do the same thing on the downside. And I'm going to look back at the chart here to see where it could possibly move below. And I'm going to make this so you guys can see it a little bit better. Okay. So let's just say if it moves 1% below this breakout level or this high. So if it moves 1% below this high here, that marks that kind of resistance zone, we are going to get out of that trade. So let's look at 172.85 times 0.99 to give us that 1% move. So we want to exit if price fails and breaks down, like let's say it breaks out first, then fails back into the pattern, we want to get out at 171.12. Okay, so I'm going to go back here, use the conditional order entry yet again. Actually, before I do that, I'm going to show you where the price could possibly go. So we're going to look at the next, let's say 2 weeks or so. Let's say price breaks out over the next week, theoretically, and then maybe it takes another week to pop back down into the pattern. Let's say it fails and it moves down to 172.12. So let's just say it moves down $1. Okay. Oops. If it moves down $1 in price, let's look at where this would be. The price of this option would be roughly $6 or so. So roughly $6. And instead of using the conditional order entry, let's just use that as kind of our stop price to get out of the option. Now, but at least if we kind of have that stop in place, kind of in the ballpark of where it would theoretically be, all other factors aside other than time and price, that would kind of give us that exit right around 609. So I'm going to use this as a stop market order. Now, there is no guarantee with a stop order that we are going to see a fill at that level. This is just going to be an activation price. When the asking price of the option is 609, it's going to become a market order there. So keep that in mind. There is obviously other stop orders you can use, but this is the one that we're going to use today. And we're also looking at the trade size of our account. So if we're going to theoretically get filled around $10 or so, we do have a bit of leeway that we can use to trade a few contracts there, and same to the downside as well. So if I click confirm and send, you'll kind of see how much we are risking here. So we're still staying within our trade size. We're going to buy 5 contracts when the price of this stock is that 2% move above resistance at 176. We're going to put our stop roughly in the ballpark of where we think that option will be. If the price drops below, we're going to move that stop up as we go. The most we are risking is 3,700 now. Obviously, it's going to be a little bit more. Like if it ends up being that $10 of that entry with that decisive move, obviously this is going to be a lot closer to 5,000, but still we're giving ourselves enough room within that trade size window of 6,300. And then obviously the most we can make is to the upside here, to infinity. Okay, we're going to place this in our price patterns account there, and we're going to hit send. Okay, I'm going to check on the chat. Let's see. When do you on the conditional order entry, when do you check the box under conditions to submit at a date and time? What is this used for? So we could have actually used that on these example trades, and we could have honestly used that on the ones that we placed last week too, because if a pattern takes really takes too much time to kind of move through, where we are kind of seeing that, I mean, I'm just putting my cursor out here. This is getting to the apex of the triangle here. If we're seeing that price is taking 2 more weeks to really craft out this possible triangle, that may tell us, hey, that's the time to kind of cancel this order if it's not filled in the next 2 weeks. So that's kind of just one example of how you could use that cancel order, is just if too much time passes, because in that case, we would be looking at a really short dated option at that time. So that may allow us to kind of change our strategy to even look out an extra month in time as well if too much time has passed. So hopefully that helps. And then Kelly said, I rarely use that. Yeah, I don't use it too frequently either. I use alerts quite a bit more. And I monitor the account pretty closely since we're doing this week to week. So we can do that. And then I see another question here. Can use daily or intraday studies to trigger a trade. Just start by clicking the gear icon. Be sure to read the confirmation statement. Yes, you can. You can use that as well. I taught a class yesterday on Bollinger Bands, trading systems, and we actually went through an example of using the conditional order entry to actually build that entry and exit order there. So you can definitely see that as well. Let's see if we have any others in the chat. I don't see any others, but now is going to be the time where we are going to go through some of the charts that we are seeing, the patterns that we are seeing take place over different time frames. So I may have shown this one last week, but this is one that I have been watching. It's rather a large triangle pattern in Pepsi. We obviously have those two tests of resistance. We have those 2 bounces of support. Now we're kind of right in the middle there. We obviously have quite a bit to go. If we kind of extend that out a little bit more, you can see we are still a little more than halfway to the apex. So that's one to kind of keep an eye on there. So that measured move, 157, 138. I mean, that's almost a $20 move. So that's a pretty big move there. AEM was another one that I'm watching. This one actually gave us a breakout today. I almost used this as a trade example, but if we kind of want to go through this, since we do have a little bit of time, we'll take the base of the triangle, we'll measure that, we'll move it to the upside here with that break, and let's see, that could possibly give us a measured objective up to 205. So that bullish trade, it honestly looks like a 2% move above that resistance right now. So as far as this class is concerned, getting a little bit of confirmation there. And then we have a possible $36, $37 move to the upside. So yeah, that would have been a great example for today's class as well. But you can still use the same mechanics that we've used today and translate this into paper money trades, trade ideas there with these. So that's kind of just the goal, to give you some patterns to watch for possible paper trades there. Now here's another one. We have Dominion Energy. I actually saw on a longer term chart, you have almost like a fractal cup and handle pattern. You have this big cup here with the handle there, and then if we zoom in even closer, we have this big cup here, the handle here, taking place over a longer time frame. And then right now we just have this really this range that we've been trading in, right between 57 and 62. So a pretty tight range there, getting really close to that upside breakout. So that is something to watch there as well. Let's see. Let's go to CNC. This is one that we actually placed in our long options class yesterday. We saw a cup and handle breakout of this healthcare stock. So we see the cup really taking place over that long period of time. We saw the handle. And if we take that measured move of the depth of that cup, project it up, It's funny how math works, how technical analysis works sometimes, where you're seeing that move really up to possibly closing that gap right above that old support, now new resistance there to the upside. So possibly a big move there. Let me see. I'm looking at a couple questions in the chat. Let's see. Okay, so we have a question on the closing stop example for Delta Airlines. Let me go back to that and show you that here. So working orders, we're going to look at Delta Airlines, and that was a 609 stop for Delta Airlines there. So we calculated that theoretical price if price moved back into the pattern, and it puts us at 609 as the stop there. Okay. So, and we would obviously move that up as the price of the stock goes up there. A couple other ones. Let's see. We have, this was a fun one that I spotted on a shorter term chart. So, I know eyes have been possibly on gold and silver, just kind of in this market as they've been kind of one of those commodities that's outperformed this past year. And so I found this stock where we have resistance right around kind of that 1324 zone. We're seeing that breakout there. We got a double bottom, possible double bottom pattern forming there on the short term, and that price objective would place it up there as well. We placed an order on this one as well in our class yesterday on long options. We had a very long range. We'd be looking for a possible move to the upside there. And then last one here, we have a range in match group, MTCH. We have 3 to 4 touches on the upside, 3 touches on the downside. So the market is showing the importance of those levels. So we gave you a lot to work with today. We went through 2 example trades, reviewed the market, we reviewed our past trades, and we showed you some new charts to possibly watch because we know you are price pattern seekers out there. So hopefully today was helpful. I want to thank you all in the chat for all your questions. Thank you to Mike Fairborn in the chat running backup for me as well. Please follow us both on X, Mike Fairborn CS, Rachel CS. You'll get these price patterns real time even before this class takes place, since it is typically only once a week. So you'll see those on my X page there. I like to go through lots of charts. And please like this video if you found today's session useful, helpful, exciting, whatever it may be. And please subscribe to us on Trader Talks on Schwab Coaching as well. Please stick around for our next class. It's usually, I think, getting started with Think or Swim is up next. And I hope you all have a happy Thanksgiving. Enjoy the day off tomorrow with friends and family, and eat a lot of food for me. See you later.